I've been a subscriber to MarketSurge for almost 30 years, and today I want to show you how I use MarketSurge to very quickly evaluate a stock. When I'm not narrating this, I can go look at a stock's potential in, 10 seconds, 20 seconds, but we're going to slow it down today, and I'll just show you all of the things that I look at using this amazing platform, MarketSurge. I initially subscribed to MarketSurge in the late 90s. It was called Daily Graphs, and then they changed the name to MarketSmith, where it remained as MarketSmith for many years, and recently they changed it to MarketSurge. So let's just jump right in here. This video is, I think, will be most helpful for people who have not had MarketSurge for very long. But I suspect even if you are a multi-year MarketSurge veteran, I still might be able to teach you a few new tips or tricks. And if you are not a subscriber to MarketSurge, this will give you a feel for the power of the platform. Now, I'm only going to use, 30% or so of the tools and information that MarketSurge has to offer. Think of MarketSurge as an incredible, fully stocked toolbox in a professional automotive garage. When you're working on cars, you use many of the same tools every day, and some tools you use less often, but you're really glad you have them when you need them. Right, let's jump in. Here we go. We're going to use Palantir Technologies as our sample stock. So first of all, I want to see a strong chart, either in an uptrend or some sort of basing action. We've got a nice double bottom high handle with Palantir, so that means we want to dig deeper. And notice what I did there. One of the things that I'm doing when I'm teaching is if I hold down the control button and left mouse, you can draw lines, and if you just click on daily or weekly or monthly, that will erase them. MarketSurge does have some more elaborate annotation tools that would take a separate video to go over those. So let's see, where do we even start? Here's the 21 day, here's the 50 day, here's the 200 day. Ideally, you want those stacked. 21 above the 50, above the 200, perfect. We want a stock within the top 20% or so in terms of relative strength. We want the stock to be outperforming most other stocks. Palantir's got a relative strength rating of 99, outperforming. It's in the top 1 percentile, and it is close to new highs. Ideally, you want to buy a stock when the stock is breaking out and the relative strength is at new highs, acting more powerfully than the rest of the market. Here, the relative strength line is kind of mimicking the price of the stock. This is the S&P 500, and you want to see outperformance. You'll notice S&P 500 was crashing a couple months ago, and while Palantir crashed initially, then it started to base and was essentially moving sideways while the S&P 500 was crashing. That when a stock is basing or going higher, when the S&P 500 is crashing, when the S&P 500 turns around, usually you see that stock rip. So that's a great sign. You can look at the earnings action when you're trying to decide whether to hold a stock over earnings. All of these are the earnings every 3 months. We can look at what the price did, gap up, gap down. That's one little clue we can use when determining whether to hold into earnings. So I'm kind of an William O'Neill disciple, and I like to see acceleration of earnings, acceleration of sales, and acceleration of gross margin. And here are those three, what can we call them, attributes. And let's just look, plus 80, plus 43, plus 75, plus 63. So we don't see perfect acceleration, but what we do see is big numbers, over 50% and 3 of the 4 and 40% a few earnings calls ago. And sales, ideally we want to see acceleration, 27, 30, 36, 39, there you go, and it's in the high 30s. That is really good, especially for a larger stock, larger company, which this is now. Gross margins 81, 80, 80, 80, pretty stable. Ideally, we want to see acceleration, but gross margin, essentially they're making 80 cents on every dollar. That is really good. Over here, we can see the annual earnings per share. Generally, I want to buy a stock that is profitable or just becoming profitable. And like the quarterly earnings, we want to see acceleration. 25, 41, 58, 73, estimated acceleration of earnings value. That's great to see. These little green triangles mean estimates have been raised. That's good to see. PE ratio, I don't take much stock, pun intended, in PE ratio. William O'Neill and Minervini pretty much debunked trying to determine whether to buy a stock by PE ratio. Certainly, I mean, you can look at the PE ratio now versus the company historically. You can look at it compared to other stocks in the industry. But the fact is that the best stocks remain spectacularly overvalued for months, sometimes years. You know, when Tesla made its huge run in 2020, it was insanely overvalued. Same thing with Amazon, same thing with Google. So I don't look into that too much. So this is the daily, right? Let's just flip over now. Oh, earnings per share. This will tell you when the next earnings report is. Not until 8/11. So that's good. We got a long runway, so to speak. And of course, we can look at volume here. Volume's drying up a little bit. That's one thing we can use to gauge whether it's going to break out here. I talk about volume dry up and so forth in some other videos. We want big blue bars coming out, and we want small red bars coming in, like so. Okay, the weekly, some different things we can see here. So this green line is the earnings line, the trajectory of earnings growth. We want to see this uptrending, preferably steeply. And if there's an uptrending earnings line way above the price, that's actually a good sign. That's one thing, one indicator it might be undervalued. In general, a stock will rise up to that earnings line if it's above it. If it's below it, let's say that earnings line, the green earnings line was below it, that's one indicator it might be overvalued. But as long as the stock is trending up and the earnings line is trending up, I would never sell it just because the price is above its earnings line. Oh, hold on, let's go back here. One thing, we can quickly access the website if we want to do some deep dive fundamental analysis. And it's important to look at the group, the industry. Computer software enterprise ranked in the top quartile, 41 out of 197. And here is the graph of the industry. In general, it's been in an uptrend, coming back in with the general market. So I would say that the industry looks strong. But let's say you've got a stock breaking out, and then you look at the industry, and it's looking like this. Pretend it's right here. This, when the industry is doing poorly, usually that breakout is going to fail. Or if the stock is basing, but the industry is garbage, that would be one reason to, not trust, to put it lower on your watch list. Okay, let's go back to the weekly. I like to check for a dividend. Dividend is always nice to see, although in a younger growth company, usually there's not a dividend. I love to see it when management has a good chunk of shares. If management owns a bunch of shares, they want the stock to go up because they own a bunch of shares, right? 4% is better than 0 or 1%, obviously, but I love it when we see 20% or 30%. Another great thing you can do is look at what are the other stocks. Here's the top relative strength stocks in the group. What are these doing? We can click on them. KC, sort of basing there. That one does not look very good, actually. Let's look at one more. Cloudflare Net. That's looking better. That's in a basing. That looks good. So we could go through and systematically go through at least those 5 leaders. Ideally, we wouldn't go through like 20 or so stocks in the industry. I like to see a trend of mutual funds here. 1349, now we're at 2461. Nice uptrend in mutual funds. There are a ton of funds already in Palantir. I actually like it better when there are smaller numbers, because then we get, as the institutions discover the stock's going to grow. If there are no or very few institutions in the stock, then it's going to be more volatile and risky, because, institutions have to jump through a lot of hoops to buy a stock. Once they buy a stock, the last thing they want to do is turn around and sell it the next day. So it gives you price stability. Speaking of stability, this is an earnings stability number. It's actually, I don't know why, but lower is better. So if a stock has low earnings and sales growth, if it is very stable, then it tends to still trend higher. So you want either high growth and revenue and income growth, or really stable, slow growth. So Palantir is not a very stable stock in terms of earnings growth. It's hard to predict. If you look at, I think Costco, in fact, I know Costco. Look at that, earnings stability of 4. On Seeking Alpha, I actually wrote an article about one reason it's done so well over the years is it's so predictable. The accountants at the institutions can predict, put numbers into their spreadsheets with a high degree of accuracy. I like to look at the estimates for earnings, estimates for sales. Look at these big numbers for the next year or so. That's really good to see. Anything else on the weekly that I look at? Phone number. I don't think I've ever tried to call one of these companies. Here you can look at the market cap. Short interest. If there's a high number of days of short interest, then there's a potential for a short squeeze. Not many people shorting Palantir right now. And then lastly, we look at the monthly, get a feel for what it's been doing. Tiny IPO base, huge. This was 2022, destroyed all growth stocks. Powerful breakout. On the monthly, it looks extended, but if you go back in history and look at how, for example, Amazon looked, stocks can stay extended for years. Now, one other thing, the 60-minute chart I usually don't use unless it's a recent IPO, and then to find a good buy point, the 60-minute chart can really help you, right? Good buy point, nice little shakeout. Whereas if you're looking at the daily, it's going to be harder to identify those buy points in a recent IPO. There's so much more available. Oh, if you look down here, if you put it in a list, you can find the average true range moves about 5.5% per day. That's a nice little thing to think about when you are determining where to put your stop. There's so much more. We can dig into some news, fund ownerships, but I'm going to stop there. This is probably all. It's really all you need. And then very gradually, if you want to dig into some more of the features, then you can do that. But maybe I'll cover those in a different video. Let me know your thoughts and comments. If there's anything big that I forgot, let me know. So when I'm evaluating a stock, I do that process pretty much every single time. And like I said, even though that took me 15 minutes, I can do that in 30 seconds or so if I'm not talking about it and I know exactly where to look. Let me show you one other cool thing, okay? This is the comparison, this little foursquare. Now I can compare Palantir to, what should we compare it to? Google? All right. Let's change the date to 2020. Palantir has blown the doors off of Google. Look at that. I have a Patreon service. I show my portfolio and focus list every weekend. I do some weekly check-ins. There's a 7-day free trial. If you're interested in that, you can check out the description below. And I also encourage you to check out my partner Seeking Alpha Premium, my go-to source for fundamental information. I'm not going to talk about Seeking Alpha in this video, but that's for another day. Holding steady while it remains a hold despite valuation concerns is the most recent analysis articles. Hey you guys, thanks for watching. Think about doing thumbs up and subscribing to my channel if you haven't. I'll see you in the next video.